Shut up and sit down.
Perfect, guys. Welcome to our new session. And yeah, I know, especially since the market has been selling off right now, that the most important thing is what is happening in the markets and what can we anticipate, how can we anticipate on the current events. So as a little extra, I will, before jumping into the topics of today, I will give a very short overview about the situation and why you shouldn't stress in times like this. But yeah, just to start the presentation, I will share the screen. And today, it's different from the last time we've been talking and we've been having a training session, because the last time we've been talking about the crypto markets and how you could take advantage of it for yourself. And today we're going to go a little bit more in depth, because I've been noticing that, especially with a couple of you guys, that we're investing into a world of blockchains, right? But next to only knowing the names of some certain coins, some of you guys don't know what blockchains are. So that's why the lesson of today, Blockchains 101, it's a very entry-level session about what are blockchains, what are they doing for us, what kind of problems are they solving, some examples. So for example, Ethereum, how is Ethereum currently behaving, what are they doing, since they're merging multiple blockchains together to create a new one, and more like what can we do and how can we learn from it, because this is knowledge that you always need, especially if you're investing your money into it, because you need to know what it is and how it could go wrong in the case it went wrong, for example. So moving into Jamie, can you give a quick introduction?
Yeah, cool. Hey guys, so this lesson is actually a very interesting one. I can't wait for it. I think it's very important to understand what a blockchain is, especially if you're investing into it, right? A lot of people start throwing money at coins and tokens and don't really have an idea of what crypto really is or the blockchain, correct? So Quincy, I'm glad you're going back to the basics and educating people on what it really is, right? Because many of you guys are already investing into it. I'm sorry, but don't even know really how it works, or like, for example, the Ethereum blockchain, how that works, proof of stake, etc. So who am I? Many of you guys probably already know me. If you don't, my name is Jamie Ramirez. I specialize in stocks and finance more than anything, right? Before joining DayTradeToday and Richard Garcia here, I was actually a financial advisor for 5 years right out of college for one of the largest firms. So I learned all the portfolio building, long-term, how to invest, I was managing people's money, etc. as a financial advisor previous to going fully independent and, joining DayTradeToday. So I'm super excited to be here for more than almost 2 years now. So I've been able to see all the growth and all the changes, and I'm super excited, as you guys may have heard today on the call that Richard had. There's a lot of changes going on, and we're super excited to be part of this. And again, my background has been in finance. And again, I'm very knowledgeable in both crypto and stocks. I've been investing in the crypto space since 2017, and NFTs and all that good stuff. So I'm very well-rounded when it comes to finance.
Yeah, Jamie is the man behind the scenes, the silent power behind DayTradeToday. So don't underestimate him, guys.
Thanks, Quincy. Yeah,
you're recording, right?
Yeah, go for it.
Perfect. Hey, so for the ones who don't know me, a short introduction. I've been doing it last time as well and in the group, so don't make it too long. But my name is Quincy, and I've been part of DayTradeToday since 2019 probably, and a part of the team since 2020 or 2021 actually, sorry. Specialization into cryptocurrencies, blockchain, technical analysis, market analysis, and portfolio building, and especially like Jamie said, with the direction we're going with the company, more into the crypto world. This is currently a perfect fit for myself to first educate you guys, but second, educate myself as well, because this world is so insanely quick evolving that it, especially for people like me, or for people smarter than me, it's really difficult to keep track on all the changes that are going on. And that's why sometimes we need to step back to the basics, and from there we can move another branch of the crypto world, because the crypto world is expanding insane with Web3, with DAOs, with the NFTs, with the DeFi sector. Everything is growing. And so that's what I'm doing. And in my journey, I will take you guys with me to share what I've learned. So, like I said, I started with crypto in 2017, day and swing trading stocks in between, and now since 2020, fully focused on crypto because that's where the world is going. What I've been doing as well is I've been doing working in the consultancy world, and mostly improving processes or implementing software robots within bigger corporates. So who are the instructors? We have a segregation in the members in our group. So we have junior traders and we have instructors. I'm one of the instructors, and the other ones are here on your screen. We have Omar, we have Colin, we have myself, and we have Andy. One of us will give every Wednesday one of these training sessions, right? So today I'm going to talk about blockchain. I think Colin will talk about psychology next week, and so on and so on. So every Wednesday we have these training sessions at the same time. So like I've been saying, I want to share my journey into this world. The other guys with different perspectives want to do that as well. So we have different knowledge. Omar's more into options and stock trading. Colin's more into options and stock trading as well. A little bit into crypto. Andy is more of the crypto guy with the smart tips and tricks. And make sure you can book one-on-one sessions with one of us, which one you like and which one you think is fitting with your training style or yourself. So make sure you do that. The other part of our team are the junior traders. So we have 7 right now, and just like the instructors, also these guys have a different perspective on the market. Some are into stocks, some are into options, some are into crypto. And they are always happy to help. So if you have any questions, reach out to one of these guys, but be aware. We've been noticing that there are a lot of scammers active. So make sure if you're talking to one of us, make sure we have an official title, and always double check, because we don't want you guys to get scammed out of my name, for example, for someone impersonating me. So make sure you do that. Quick group update. Go ahead, Jamie.
Cool. Can you see me?
Yeah.
Cool. Hey guys, so quick group updates. Again, if you guys were on the call earlier and probably heard all the in-depth updates that Richard gave and that we gave inside that call, you probably already know. But again, the DayTradeToday app will be launching in Q1 of this year. We're super excited for this. The main reason for the changes inside the group to become a signals group. I know a lot of you guys are new to the group, and many of you guys have been with us for a while now, and you guys have seen the growth that the company is taking, and we're just super excited for this new app. It will be our own platform that will allow every single one of you guys as a user to educate and learn with beginning and top stock, and specifically crypto investing and trading, as this will be a platform for all of us to learn and educate and trade on, which we're super excited. Obviously, the Wall Street NFT was launched and it was sold out. That was a great project, and as you guys may have already known or maybe not, Richard himself has purchased multiple lands on the metaverse. He has actually hosted some events already on the Crypto Voxels metaverse. So it's super exciting. If you guys haven't checked it out, make sure you guys are staying tuned to listen in and join us in the next Hide and Seek event, where he's airdropping a lot of wearables, NFTs, etc. So it kind of gives you an idea and gets you used to being part of the metaverse and understanding how it works and how you can start educating with us here at DayTrade today. Again, metaverse meetings are now being held. Make sure you're staying up to date and stay always to the end. We have a big announcement at the end that I will be making. So make sure you guys stay always to the end, because you don't want to miss out on this opportunity. And for every single one of you guys that join, again, there's something special for you guys. Everyone else who doesn't join these calls or these lessons on Wednesday, they're actually free and super in depth. Will be missing out. So make sure you guys stay always there.
Perfect. Thanks. Hey, blockchain 101. That's the topic of today. But before, like I said in the beginning, I will give a quick overview of what I've been seeing in the markets for us and everybody to settle down. Because the point I'm trying to make right now is don't get triggered into doing things you don't actually want to do, right? What I've been saying, if there ever was an opportunity to de-risk yourself, it would have been over here at the top, where you can see this top, a slightly higher top, a lower high, and then a sell-off. That would be the opportunity to de-risk yourself. If you're now thinking in the worst possible scenario in which we are seeing a sell-off after sell-off, support being broken through, looking for liquidity, might not be sure if we're taking the liquidity and moving back up or going lower, this is not the time to think about selling, because you should have been doing it over here. Right now, you only will be realizing your losses over here. The scenario actually didn't really change, right? Because we were still in this accumulation zone. Right now, testing the lows of the weekly candles and the lows of the weekly trend line. So you can see still in an uptrend. We're in the weekly EMA ribbons, and as you've seen before, the weekly EMA ribbons in the previous run, it was in May, June. You can see it has been tested multiple times at the bottom of the ribbon as well. And right now we're currently are over here. So there actually haven't really been so much changes since today or yesterday or last week. So don't get triggered into doing things you don't really want to do right now, because there's no real, it's not the right thing to do right now. So keep in mind, don't get stressed. Nothing really changes for now. And I will give a new update tomorrow morning in the market update. For now, jumping into blockchain 101. And like I've been saying, I can see the times of when you're trading and when the market isn't in your favor, you should use that time to educate yourself, because there's a limited amount of possibilities you can do when the market is going down, is downtrending, right? You can short the market, but most of you guys are not shorting the market or are not short trading at all. So the only thing you can do is buy and increase your positions in these weekly buy zones we've been talking about. So where are your weekly support and resistances? But it is a limited action. So there's a limited amount of time, and you have a lot of time left to actually educate yourself. So you always need to make the most out of the situation you are getting, and we are getting right now. The market is not going to reverse for today or tomorrow or even a week or even a month, but don't waste the time. So what we're going to do, what I always do, is I educate myself in the times that I'm not trading. This is a perfect example. So blockchain 101. And what are blockchains? Like in the beginning, I've been saying, what are blockchains? How do they work? Some examples, what problems do they solve? Ethereum example, and how is the future going to look like? And before jumping into blockchains itself, I will walk you through a brief history about mankind, actually. So in the whole history of mankind, we've been trading, right? So in the earliest ages, we've been trading foods, we've been trading animals, we've been trading houses, we've been trading everything. Remember when we're the hunter-gatherers, right? We have a village, and people were mostly trading animals based on violence, right? So the strongest men mostly came out with the best deals and the best food and the best animals and the best wives. And that's a trade based on violence. And the further we go into our history, you can see that later on, when the world got wider, we had more transportation opportunities, people moved farther away from each other, our transactions and our trading became more difficult. We invented money, and because of the difficulties and the difficult scenarios, we needed some kind of intermediaries to help us with these transactions, right? Because not in every scenario we were able to solve these trading problems from one to another. Let's say I am willing to make a trade with Jamie, but Jamie lives in the other side of the world, and we cannot arrange this for ourselves. So we need an intermediary who will make some agreements, who will send my money to Jamie, and the other way around. So send Jamie's product to me. So I'll give an example in the coming few slides about a trade, and I'll give the example about Jamie and me. So we have an intermediary, and the intermediary is arranging all the difficult things for us. You can see it in a few ages ago or a few years ago, where the banks, so physical banks, physical institutions, and with the developments, the blockchains, and the world with tech and innovations are currently having, these institutions, these physical institutions are changing into an online institution. For example, Amazon, of Alibaba, and these online institutions are the middlemen to facilitate in human economic activity. And there is one point, and you can see it on the bottom of my screen, why we need these kind of intermediaries or middlemen, and that's because of uncertainty. And in the next slides, I will walk you through a couple of examples. But basically saying uncertainty is, I'm not sure if I get my money from Jamie. I'm not sure if Jamie even has the product. I'm not sure if Jamie even has the money. I'm not sure if Jamie isn't even reliable, for example. So there are a lot of uncertainties on why I don't want to arrange this trade-off myself. That's why we need intermediaries. And normally we would have been needing these intermediaries for forever, right? Because there is always a certain kind of uncertainty. But right now, this moment in time, is the first time we can lower the level of uncertainty without adding new institutions of middlemen, but by using technology. And that's what the blockchain is. A blockchain is a way to lower uncertainty between trade-offs without using an intermediary or a middleman. That's a blockchain. And to put it in a perspective, this is a definition. It's more technical. Let me swipe myself out of the screen. So it's more technical, but the blockchain is basically saying it's a decentralized database that registers assets and transactions across a peer-to-peer network. So let's divide it into more manageable parts, right? So a decentralized database. Decentralized, so normally we would have been saying a centralized, so centralized as a bank or an Amazon or a Binance or whatever. As a centralized organization playing the part of the middleman. Decentralized is meaning that we don't have someone who is in control. We don't have an intermediary or institution that is controlling the transaction. So basically saying my transaction is only between Jamie and me. Who is creating a database, so a lot of information, stored information. And in that information, we have the assets and transaction. So basically all the asset and transaction information is stored in a big store or box of information, a database, across a peer-to-peer network. So across a network in which we have multiple people controlling the environment. So controlling, and we'll jump into what it actually means, but multiple people, peer-to-peer networks. So the transaction is only between Jamie and me. We have a network that is based on consensus and control and validation. So that is what a blockchain actually is. So Bitcoin is an example. And another example, not exactly about a blockchain, but more in a real life example that currently is going on, is Wikipedia. So I think everybody knows what Wikipedia is, but Wikipedia is basically an open platform that stores letters and images. So basically saying that everybody is able to adjust pages on Wikipedia, adjust information, correct information. But if there is someone going, let's say, for example, I put some information in that's totally not true, Jamie will be noticing that. So if Jamie scrolls to Wikipedia and he sees the transaction backlog, or he sees the backlog, or the where he's been noticing that, hey, Quincy changed this and this and this, and he's going to look at it and he see, hey, that's complete bullshit what Quincy's writing, so let me adjust it to the right information. So that's the peer-to-peer network, peer-to-peer consensus. People are able to solve other people's problems if the information is not right. Everybody can edit it and everybody can track the changes. That is Wikipedia, and that is what makes it so powerful, because everybody is able to contribute to the system. So a blockchain, another definition that you might have been hearing, is a blockchain is a distributed ledger. So a ledger that is open for everybody around the network. Everybody has the same information. Everybody sees the transactions between one another. And so everybody is notified what's going on. And I will give an example about what a blockchain is. Let me zoom out because I need to take some things. So a blockchain consists of multiple blocks. And a block is basically saying a block is a piece of data. And in this data, we see three things. We see the sender. So in this case, that will be me. So you see Quincy, you see Jamie as the receiver, and you see the amount. So for example, Quincy sent to Jamie $10. That's the example. That's all the information inside one of a block. The block will create a hash. And this is a simplified version of a hash, where a hash is meaning, or basically saying, this is an example, data. So in this case, it's a few letters or a couple of words. Configured through a hash function, in this case, a SHA-256. Not really important, but you might hear it in the future as well, so you know what it is. It's basically saying it's a hash function that makes sure that you get these bigger codes, right? And these bigger codes are the one that stores the information. So we have a hash function that is giving the block value, and the interconnectivity between these blocks are based on that you can see that the hash of the previous block is written on the next block. So every block has a hash and a previous hash. Remember, a hash is just information, input data, only configured to a bigger number, letter code. The first block, as you can see, doesn't have a previous hash. So the first block is what we call a genesis block. It's the first block of a chain, and it only has the data and the previous hash. The second block, you can see it has a new hash code of itself. So the second block can, for example, mean that, so Jamie received $10 from me, and right now Jamie needs to pay Richard $5. So the second block is, hey, from the $10 Jamie received, he's going to pay Richard $5. So we have a next block, new hash code and the previous hash of this block. So that's the first chain, the first part of the chain that you are starting off. And let's say Richard right now is willing to pay me $5 as well. So you create a third block and you can see where it's going, right? So every transaction, there's a new block added. But let's say, for the sake of argument, right? Let's say for the sake of argument that Jamie thinks, hey, I don't really like that Richard guy. So what I'm going to do is I'm going to change the blockchain up. It looks like that I didn't pay him. So I can keep my money without being known that everybody else sees that I didn't have him paid, right? So we're having the chain, and Jamie thinks, let's change up the data so I can keep my money. What will happen, and why blockchain is also powerful, is the following. So we have the data and we have the hash rates, and everything is already interconnected, intertwined to each other. But Jamie is thinking, hey, I don't like this. I want to keep my money without everybody noticing. So he's changing the data in this block. And normally nobody would notice it. But what is happening in blockchains is that the hash rate, every time there is new input data, so Jamie changed the amount from 5 to 0, the hash rate changes. So the hash will not be blah, blah, blah. You get a new block, just for the sake of argument, right? So you get a new block. So that means that this previous hash is not valid anymore. So what is happening, you create a new block, and you create a new chain. What is happening is that instead of one bigger chain, you have the one biggest chain that is saying, hey, Quincy paid Jamie, Jamie paid Richard, for example. The new chain that is going to exist next to the first chain is saying, hey, Jamie never paid anyone because he changed the data into from 5 to 0. So you have two separate chains. And the biggest one, and that's the rule of thumb, the biggest one is the one that is true. So we have a chain that exists of three blocks in this case, and we have a new chain that exists of one block. So if there will be another transaction, and the validators in the network will be noticing that there's something changed, so the same transaction has two blockchains, and they can validate, hey, what is happening here? How come that we're seeding two different chains for the same transaction? So they can walk back. In this case, it's really simple because we have 3 blocks and 1 block. But they can, on the bigger blockchains, they can validate it by seeing where, in which point in time the data changed. And they can see, hey, block 2, that's weird, right? Because normally we would have seen the normal transaction way, but this is changed. So someone has been fucking up the system over here. So they filter out the second chain, and the first chain, the longest chain, is the truth, and Jamie has to pay Richard. And that is giving so much visibility and transparency in the whole transaction lane of blockchains. Because every change that is other than the main network, the main blockchain, is going to stand out. Because you see a different branch of the blockchain. And that's the power. It's one of the powers of the blockchain. The information is very transparent, very insightful, and every change is going to get noticed. It can be today, it can be tomorrow, it can be next week, but it's going to get noticed. So Jamie can't hide his payment for anyone else anymore. What I've done, I've taken another symbol, a clock, and that is basically meaning that to create a block, there's some built-in security. And one of the built-in securities has to do with proof of work. And proof of work is ensuring that a new block only can be created once every 10 minutes. So that's why transactions normally take longer, especially on the Bitcoin network. And there are some improvements and there are some new ways to make it faster, but to prevent hacking and prevent people, like I said, like I've been saying, fucking up the system. There's a time-limited block creation zone. I'm not sure. So there's a time-limited area in which how much blocks you can create. So, for example, in this case, you can create a new transaction on the same blockchain every 10 minutes. It's called proof of work. And we'll zoom into proof of work in a moment. So that's the example. And to zoom in right now on why do we need blockchains? So remember that we've had the situation over here that we're always trading, and we have been doing in the past and we will be doing in the future. In the meantime, we have new inventions and new technological developments. So we had the institutions and we have the online institutions now. And saying, why do we need the blockchain? So back to my example, right? So I want to trade with Jamie. And let's say in a new example that Jamie has a cell phone and he has a really nice iPhone and I'm thinking of buying it from him. What people normally do is they are uncertain, so they want answers, right? So the first thing is that what I want to do is I want to make sure that Jamie is the right guy that I want to buy from. So I'm going to look for reviews on the internet. And I'm going to look for ratings, for check marks, for verification. The background of Jamie, I'm going to look on LinkedIn and Facebook. I want to make sure that I'm buying from Jamie and that he's a right person to be buying from. The second thing is but I want to make sure I'm uncertain about the asset itself. So I'm not sure where Jamie got the phone from. So Jamie can really be a normal guy that he had used the phone very limited, and then I want to resell the phone to get an extra cash flow or to get extra cash. It can also be that Jamie stole the phone from an elderly neighbor in his neighborhood. No idea. And the third thing that we're really uncertain about is reneging on deals. Basically saying, if I pay Jamie, I'm not sure if he will give me the cell phone. I have no idea. Maybe he's a scammer. No idea. So blockchain is solving this. And blockchain is solving this in 3 different ways. So remember, number 1, identity management. And a blockchain, to make it first really difficult, is allowing an open global platform in which to store any attestation of any individual from any source. Difficult words, basically meaning that I can find out who Jamie is and what he has been doing from the past transactions that he's been doing since whenever, because the blockchains go way back since the first transaction that he is willing to do on the blockchain. So I can check and verify who Jamie is. I don't need anyone else to do that because I can follow Jamie's behavior on the blockchain. So it's creating a global platform in which all the data that Jamie has been doing with selling iPhones, for example, on Jamie in this example, from any different source. And everybody can see that. So instead of looking on LinkedIn, looking on for reviews, for ratings, for check marks, I can do it myself by following the blockchain. So it's taking a part of my uncertainty away because I can see what he's been doing. The second thing, the asset tracking part, is the blockchain is creating a shared reality across non-trusting entities. Again, basically saying is that on the blockchain, we can see, and I can see, where the phone has been coming from. I can see and I can follow the production date of the phone. I can see, hey, the phone is coming from Amazon. I can see the phone is coming from Apple. Or I can see that the phone normally was in the ownership of another people, an elderly man that has been in Jamie's neighborhood. So I can follow the road that people and the phone has been tracking and has been following in the period of time the phone is existing. So following the blockchain and following the steps, I can see where the phone came from. I have a transparent system to see where the phone has been and where the phone is going. So I can follow it as well. See it like some kind of track and trace. So you can follow where your package is and where your package has been. So it's now over there, it's now over there. Next to that, I can see where the phone has been, who was the owner of the phone, and if it's legit, right? That's the second thing. And the third thing is, remember, I was not sure about if Jamie, if I send him my money, that he will 100% send my phone. What blockchains can do, and it's a part we're going into a little later, is called smart contracts. Basically saying that you have a entity, you have Jamie and you have myself, and we're creating a contract, right? And the contract is saying, hey, Jamie, I want to buy your phone, and I'm willing to pay that $1,000 for, but I'm only willing to pay if you exceed all my goals. So I want it on this date, at this address, without scratches, blah, blah, blah. So I pay the smart contract, and the smart contract is only paying Jamie when the phone is arrived with me, and when I accept the state of the phone and where there are no scratches, etc. So we can write code-binding contracts between individuals and guarantee that those contracts bear out. So Jamie only gets paid when all these goals are met. That's what a blockchain can do. So in every scenario where we normally would have been needing a bank for verification, another Amazon, for example, to follow my package, and a lawyer to make up the agreement, the blockchain is filtering all these guys out. And that's immediately the main pain point why this disruptive technology is so stressful for multiple guys, because it's going to filter them out into the supply chain. The banks are nervous, lawyers, etc. All these guys are nervous because there's now technology that will replace them, and it's better and it's safer and it's quicker, and it's applicable to almost every industry. So it's really difficult for these guys, and that's why I think it's one of the most hardly accepted technologies right now, and especially in the coming years. And that's why crypto is such a difficult topic, because accepting that this technology works will automatically mean that banks, it will not go day by day on a day by day transition, but it will automatically mean that banks and governments and all these other things are not in control anymore, because we have a better solution. And that's the problem. So jumping into security. And security is the best and one of the most important topics into blockchain, because if we want to, the certainty and the safe and the nice thing about these intermediaries is, let's say, for example, if I lose my money to Jamie and I paid him with my credit card, I can go to a MasterCard, I can go to Visa and I say, hey, Jamie is fucking around and I'm not sure, I don't get my phone, I did pay him, can you make sure that I get my money back? And these institutions can ensure that I get my money back. Without these institutions, we don't have a human in the loop anymore. And if we don't have a human in the loop anymore, then there is the uncertainty of how secure is it and how safe is it, and is this the right decision for me? So security is a big topic in blockchain exception. But we've been seeing that blockchain is building itself up to 3 different points of security. First thing is that the blockchain is a distributed network, peer-to-peer, and there needs to be consensus. So building on that, we have a distributed network. Basically saying is that we're having a blockchain, and I have the blockchain on my computer, and Jamie has the blockchain on his computer, and Richard has the blockchain on his computer, and Andy has the blockchain on his computer. So everybody's seeing the same thing, just like Wikipedia. Everybody's seeing the same information. It's peer-to-peer. So everybody's seeing it, and everybody needs to agree on what we're seeing. So Wikipedia as an example, if I see on Wikipedia, or if Jamie sees on Wikipedia that I am talking nonsense about a topic I don't have any idea about, he can say, and he can adjust that I'm talking nonsense. So he can adjust it to the right information. And everybody needs to agree on that. And that is consensus. So once everybody that's seeing the information on Wikipedia is agreeing with it, then the information gets pushed out. And that's how the blockchain is working as well. Everybody's seeing the blockchain, everybody's seeing the information. If everybody's agreeing on how that's worked and how it's working, then there is consensus, and then the block can be created. Blocks gets created by miners. So there are people, and as part of the proof of work step that we're going to walk into, it's part of proof of work, and proof of work is basically saying we're having people that are creating these blocks. So by having computers that are able to solve big computational problems, we can create these hash rates, and these hash rates can connect these blocks to each other. And for the computer for the company that does this the fastest, they get a fee, an amount, a part of the transaction money or miner fee to incentivize them for keep on doing this work. and by validating the network and continuing on. So proof of work is saying that multiple people are going to create and look at the same information at the same time. So there needs to be consensus. And we've been talking in the beginning about that proof of work is making sure that blocks are only created once every 10 minutes, for example, to make sure that there is not an entity that can hack the blockchain and change every network, because remember, it's distributed. So if they want to hack the blockchain network, they have to hack my blockchain, they have to hack Jamie's blockchain, they have to hack Rich's blockchain. And by ensuring that this proof of work network and new block creation takes 10 minutes, computers cannot create the new blocks and the new chain before everybody's seeing it. So the distributed network in combination with proof of work and consensus is really powerful. And then we have the other point that we said in the beginning, that if there is a change, so remember Jamie changed the data, there will be creating a new blockchain next to the main chain. And new chains, shorter chains stand out. So proof of work versus proof of stake. And I think you probably might have heard of proof of stake already. Proof of stake is the next step into blockchain security, but also in environmental and energy-friendly technological developments. So proof of work. Proof of work is saying we have a new block and miners are creating the block. And miners are the computers or the companies who are creating these hash rates or hash functions the fastest. And the one with the most computational power is often the first to create the block. And the first to create the block, he gets a reward. We have the mining pools. So by combining more miners and more computational power to each other, you're creating miner pools. And the more computational power, the more efficiency. So the faster you create this block. So by creating these companies, and some of these companies are actually on the stock exchange as well. I can't remember the name anymore, but some of these companies are on the stock exchange as well. They're really big companies. But a problem with mining pools who are getting too big is that if they are getting the upper hand, so if they are controlling 51% of the blockchain network, then they are controlling the whole network. Because if they have the computer and the computational power and the energy and the efficiency to create more than 50% of all the blocks, they're in control and can change everything. So there's a small lag in the proof of work system. And that's why they are now creating, and it's already existing, but it's now starting to get attention, proof of stake. And proof of stake is instead of, so we have proof of work where everybody can contribute, but only if you have really fast computational power. So I can't go with my laptop and yeah, I can do it, but it's very inefficient and it will take a lot of energy. So it's not really recommended. Proof of stake is basically saying a creator of a new block needs to be staking a minimum amount of coins to apply to the network. So, for example, if I want to apply into the validation process and creation of proof of stake blockchains on the Ethereum network, let's say I at least need to stake 100 ETH to get applied into the system, because that is my skin in the game. I need to have skin in the game, because if I fuck things up, if I do it wrong, then they can take something of my staking and put it as a refund in the system. So there's an insurance that I do my best, that I do the best thing, what is the best for the network. So that is proof of stake. So instead of everybody can attend and validate, Now, only the people who are putting skin in the game can validate it. So it's less energy consumption and it is safer, because if you do things wrong, you will actually lose money. And that's what all these bigger staking platforms are doing, right? You have Binance, the Kraken, Gemini. Difference between interest and staking. Interest is basically saying what banks normally used to do. So you have BlockFi saying, hey, if you buy Bitcoin from us and you gain 5% interest, for example, in the meantime, they are lending these Bitcoin out for a 10% interest. So they are earning 5% on your Bitcoin. That's interest. Staking, and what Binance and Kraken, etc. are doing, is basically accumulating as much Bitcoin or Ethereum as possible to validate and provide and apply into the stake network. So they're staking, so they're creating new blocks. And the more blocks they have, the more certainty. That's what staking and proof of stake is. So instead of the one who first solves the puzzle, the hash rate, who gets the reward, now the miners take the transaction fees. So a proof of stake, the reward for the miners are the transaction fees. And the transaction fees are actually pretty high. That's why if you stake Polkadot, for example, you gain 12% on Binance. 12% sounds like much, but I think, I'm not sure about the certain amounts, but Binance is earning 30-40%, for example. So they're earning 30 or 40% by staking and validating the blockchain on Polkadot. And in the meantime, for you providing your Polkadot to Binance so they can help and step into the system, they get 30 or 40%. That's how these guys earn money. And you can do it yourself, but you need to be a smart guy to apply the proof of stake network. And you need to have a minimal amount of money to actually step into the network. And proof of stake, last point, it's decentralized most of the time. And it's very cost effective and energy efficient. So it's a better version than proof of work. What's the problem with proof of stake? There is one thing, and that is if similar scenario, only a bit safer. So if you had 51% of the computational power over here, then you would have controlled the network. And now over here, if you have 51% total market cap, then you control the network. But that is such a small chance, because there's almost no possibility, because the money is spread out over everyone and everywhere, that some instance and some company is owning 51% of all the Ethereum in the world. So really small chance, but a risk indeed. So this is an example of Ethereum. And Ethereum is merging right now from proof of work to proof of stake, mainly because it's energy efficient, and the new proof of stake blockchain has a couple of upgrades. And these upgrades, that's what they're calling the EAP 1559, the EAP 3238, blah, 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 all these different numbers. And those are called hard forks. Hard forks are basically updates to the blockchain. And all these hard forks, in this case, always are a small part of transition into the merge of different blockchains to the mainnet. Because if a blockchain grows to be so big as the Ethereum blockchain is, then a merge can't happen at the same time, because that might include problems, right? So they're doing these upgrades separately, creating a new blockchain. So you have the mainnet and you have the new blockchain, in this case, the Bitcoin chain. And they're step-by-step merging it with small upgrades, letting it run next to each other until they can merge it. That's what is going on right now. So the upgrades that we have been seeing is, for example, the burning of the Ethereum tokens at the fees rate. When there's transactions, we're going to see another upgrade. We're going to see staking upgrades. So the Beacon chain is now already running next to the mainnet, and we're walking into the merge. And the merge is most likely going to happen in June 2022. And that's when Ethereum 2.0 comes out. So Ethereum 2.0 is the proof of stake blockchain from Ethereum, so the merge. But most likely going to be delayed, because I think that the first opportunity that the merge and proof of stake should have been happening was, I think, already a year ago. Not sure about the exact date, but it's been delaying and delaying. And it's because it's big. The chain is so big, especially with all the NFTs that has been exploding. So the blockchain gets bigger, and when the blockchain gets bigger, the merge will be more complicated. And it cannot happen that the blockchain runs still, freezes. So it has been happening with Solana, because in that case, the blockchain is vulnerable for hackers. If the blockchain is running, the opportunity for the hackers is very, very slim. So it cannot happen that the merge and that the chains are freezing, because that gives an opportunity for hackers to change things without people noticing. So everything has to run smoothly, just like an operation that has been investing and upgrading their machines. The operation has to run, and the machine has to be implemented during running time, so you don't lose money. And that's what's happening with Ethereum as well. Well, smart contracts, and we have been touching our toes already a bit on smart contracts in the beginning. The smart contracts are one of the, let me go back to the slide. Where was it? Yeah. So one of the, we had the uncertainty principles, and smart contracts are one of these things the blockchain creates that is filtering out these uncertainties. So what are smart contracts? Smart contracts are actually quite easy to understand. And there are multiple networks who already have smart contracts, like Ethereum, like Solana, like Polkadot, like Cardano. And it's a programming tool, so it's a coding contract. And it's been coded Solidity, so it's in JavaScript. And it's actually the same concept as a blockchain is doing. So removing the intermediary. And smart contracts, for example, like the example I gave with Jamie and myself. So this is Jamie and this is me. And Jamie is willing to sell the cell phone, but for him, it's uncertain as well. What is Quincy going to pay? What is he going to do? So we are going to create a smart contract, which is saying, hey, Quincy is going to pay $1,000 for the phone. The phone needs to be in optimal condition, and the phone needs to be received by then and then and then, for example. So what I'm doing is I'm paying the smart contract the money. And once I receive the phone and say, hey, the phone is on time, the status is good, and the price is good. If I check everything, then the smart contract is paying out Jamie. If the phone is scratched, then I'm not going to pay Jamie because I didn't want to buy a scratched phone. So the smart contract is not going to pay Jamie. And that's the smart contract. And that's basically what these institutions and lawyers are doing as well. We have a standard set of agreements. And if the agreements are not met, Jamie is not getting his money. And it works with contractors, with everything you can imagine. Everything where we need contracts for right now are going to be smart contracts in the future. So the beautiful thing and the good thing right now is that once these smart contracts are settled, so once we agree on the terms, nobody can change it, because remember the example in the beginning, so everything is coming together right now. If you change the data, you get another block, another chain, and the agreement is not valid anymore. You can do it with loans, with payments, with claims, with whatever you want, whatever you can imagine. And now the future. And the future is actually quite easy, because on the screen you can see a couple of examples of how blockchains can be used in multiple sectors Like for example, in the clean energy or the grid chain where people are driving, where the order placement is, the mortgage processes. Not sure this anymore. This is the payment. Oh, it's the payment transactions. Let me see what it stands for here. In travel, for example. So with hotels and with persons and without an intermediary. So instead of using Airbnb, you can just contract the renter of the house via the blockchain. You can use smart homes, energy consumption via the blockchain. Look for peak moments, look for lower value moments, and interchange it a bit. So we're always having the right amount of right people at the right time, the right place. You can do it in the supply chain, creating the optimal supply chain zones in which I don't need the bank to contact my supplier, but I can directly contact my supplier and my other parts of the supply chain to create these intertwinedness of the processes. So you're getting to be more in control with a lower cost in a greener and more energy efficient environment. Blockchains are applicable to every industry, almost every industry. Smart contracts are applicable to almost every industry. So what I want you to do is sometimes just look away a bit from the hype. And the hype is the cryptos, right? The hype is the cryptocurrencies, the amount of money that you can make. But if you look at this particular technology, then you see why the hype is here. Because the technology is so disruptive, is so good, is so safe, and we're still in the beginning stages. That's why the hype is here. And these ADA, ETH, BTC, Solana coins, all these things are the ways to pay on the different blockchains. So all these coins we normally talk about in trade are different blockchains with different use cases. And the way to use them is via the Polkadot network. For example, if I just for argument's sake, if I'm going to do the mortgage process using blockchain, I use the Polkadot network. I'm going to pay everybody in DOT because that's the currency of the Polkadot network. If I'm going to do the grid chain blockchain perspective, in the chain on the Chainlink network, I'm going to pay. The payments is going to be in Chainlink, and that's why there is hype, and that's why we're trading cryptocurrencies, and that's why the market will be growing year over year. That's why you don't need to stress if we're at 45 or at 30 or at 25, because we're just at the beginning, guys. This is the industry that's going to disrupt everything. And right now you have a bit of an idea about what it is, how it can help you, and how we can participate in the network. So that is the presentation. Let's see if we have some questions or we have something in the chat. Manila says, FK, let's see. I get your female. For example, was taken, but not really questions. Let's say annual per year. So you do make 12%, and it's always annual per year, right? So you're going to get these 12% spread out over the year, and basically saying staking periods are normally shorter amount of times. So let's say, for example, I can stake Polkadot for 12% a year, but only for 30 days. So during these 30 days, I get these 12% per year, but it needs to be divided over 365 days. So I get a huge amount, but I need to switch from stake pool to stake pool because there are different stake pools on different platforms, because there are different companies who are mining. And remember, the first one is getting the reward or the fees. So not every pool is the most efficient one or the best one. So not every pool can give these high staking rewards. So that's why it's only a limited amount of time. So let's say 30 days, and the percentages change because the computational power or the amount of being staked is changing as well. Okay, how can we invest in the technology? Just invest in the coins. So the coins are the flagship of the currency or of the blockchain. So by investing in the coin, so let's say by investing in ADA, in Cardano, you're investing in the development of the blockchain. So that is investing, and that's why longer term perspective actually helps these projects. Just like you have been, if you invest in Tesla, if you buy the stock, you invest in the company, and that company has more room to develop and innovate. And it's the same with Cardano. I see the question, why do all these different blockchains exist? So basically, these blockchains are companies, and every company has its own vision and its own part of solving different problems. So Polkadot has a different use case than Chainlink has, and Ethereum has a different use case than, let's say, Solana has. No, it's pretty similar. Wrong example, but whatever. I can't. What kind of chains do we have? With Ethereum, with Matic, we have you have all these different use cases. We have. Can I give a good example? You have the Bitcoin, you have Ethereum, yeah, whatever. What everything we're trading always, right? So all these different companies are solving different problems. So every company is creating its own way of solving and problem solving and doing it via their own blockchain. And their own blockchain is creating their own currency. And that currency is, in this case, Polkadot, or is in this case, ETH. That's why you have different blockchains for different purposes. Chainlink is connecting everything, all the blockchains to each other. Ethereum is building the platform on which different applications can be built on. And if I want to give you a tip on the most secure investments, and that's why I mostly talk about layer ones, because layer ones are the foundation of the blockchain and application world. So layer one is the platform, Ethereum, for example, and on these platforms, different companies can be built. So there are applications like Uniswap, like Solana, like Matic, like SushiSwap, PancakeSwap. All the DeFi projects, all the NFTs are built on these platforms. So if you're looking for safe investments, look for platforms. AVEX, for example. Solana is another example, but look for platforms, layer ones, because if these platforms fail, the Uniswaps will fail as well. If Ethereum fails, then you have no use with Uniswap. You have no use with 90% of the NFT industry right now if Ethereum fails. Safest investments are the layers, the ground layers. How can we invest in the blockchain technology and not just in the crypto and coins? So, yeah, like I've been mentioning, the investing in the what you can do, and maybe there will be some companies publicly traded into the coming years if they grow bigger. So probably that's an opportunity to invest via the stock market. Right now, I think you can only do it via the coins, but I'm not sure. Otherwise, you have to contact the company itself. But I think if you want to be an investor in, let's say, Chainlink, for example, or Cardano, they're talking about serious amounts. And so I think it's not applicable for just retail investors. The best way forward is to just invest in the coins. Let's say, I think we got every question now. Q&A, yeah, perfect. Okay, announcements. Jamie, go ahead, man.
Thanks, Quincy. Cool. Can you see me?
Yep.
Awesome. Let's go on the announcement. Can you go to the next slide? Hey guys, thank you so much for being on here so all the way to the end. So the big announcement now is we have a brand new advanced crypto course. So I know many of you guys have been asking to learn about everything, right? To learn about staking, yield farming, exactly what Quincy just went over. All of that, but in depth for 2 days. Well, not 2 days, sorry, that's the camp. For this crypto new course, sorry, is 7 hours long. I'm thinking about the camp that's also coming up. So I'll give you guys details on that in a bit. So this course is super in depth. Like, this is literally Richard going all in, giving all his 15 plus years of knowledge inside of this brand new crypto course. He created this because many people were asking that. They were asking, hey, I want to learn everything, how the blockchain works, how to trade crypto, how to stake coins and what does staking mean, how to yield farm with some crypto, how NFTs work, how do I know which NFTs to purchase, how are you analyzing these NFT projects, how do I land on the metaverse, how to flip digital land, all the good stuff that comes with this new market, which happens to be the crypto, that Quincy did an amazing job of going in depth and really breaking down what the crypto blockchain really is. All of these beautiful things you get to do with staking and NFTs are all products of this blockchain, right? Of this beautiful new market that is blowing up, and people who are learning how it works are monetizing. We have 16-year-olds making millions on NFTs that happen to be on the blockchain, right? So if you're still at home wondering, hey, what coin should I be buying? You're behind. I'm sorry to tell you, but you're so behind. One, you don't have enough education because you're still trying to gamble on the next coin that's going to hit the moon. And I'm here to be very transparent with you guys. What Quincy just went over is honestly one of the most in-depth education on the blockchain that I've seen. And I'm glad he went in depth and really broke it down to you guys in simple words of what the blockchain is. And all of this in depth will be covered in this brand new course that Richard just created for you guys, right? So many people were messaging him, messaging us, asking us about all this stuff on the blockchain, how to monetize on the crypto blockchain network. So again, this course is an exact step-by-step screen share of how to set up all your decentralized systems, your wallets, your DEX. It's a detailed walkthrough on gas fee management. That's something a lot of people don't really understand. And when they're buying an NFT, they're paying so many fees, and they're like, yo, I can't afford that anymore, right? So you have to understand how all of this works, and it's crucial to really have someone like Richard, have someone like Quincy, for example, break it down. And in this course, Richard is literally walking you through step by step. He's literally telling you, go here, click on this website, click here, set this up. Literally a full walkthrough, right? So we're super excited. Right here, we see the promo code. It's activated right now. I just got Felipe on our team to activate that for you guys. So again, the promo code right there is CryptoDTT. Save that, CryptoDTT. After this session, reach out to Quincy or to myself, and we will send you this brand new link to this new course that only you guys on here will have access to this discount that will be activated from here all the way to midnight. If you guys need me to extend it to you or Quincy, message him or myself, and we'll extend that for you guys, because only you guys right here are hearing about this and getting the crypto code activated. So again, guys, if you're looking to educate in the crypto space, this is the full out walkthrough that Richard has created. And I've gone through it myself, and honestly, it's just super in depth, right? It's literally step-by-step walkthrough. Like, I don't know how much more simple it can be. Even if you're a newbie, what you want to call it, or a beginner in the space, this is literally for you. Like, honestly, like if 5-year-old could really watch this and understand, okay, great, so I can set up like this. It's literally that simple. And again, if you don't monetize off after this, it's because one, you really didn't pay attention, or you just kind of skimmed through it, or two, you didn't really care to go through it, because this is literally telling you step by step how to monetize with the crypto. This is an incredible course. It's brand new. So guys, save this. CryptoDTT promo code is activated for you guys now. Send me right now and Quincy a message. And how can I contact you? Send me a message, or Quincy, send Quincy a message. Somebody just asked that in the chat. I don't have your contact details. Find us on Telegram. We're on Telegram. I'm Jamie and Quincy. Find us on Telegram. We're admins, and he's a top trader on there. Literally go on members, and you will see us with our tags, and send us a message, and we'll get that for you guys. I'm super excited about this. And that takes me to my second point. If you actually want to have the full out group session education and ask Richard questions live, that takes me to my next point. You can either have this crypto course and go through it on your own, or you can join the first crypto bootcamp. Quincy, can you go next slide? Do we have that on the next slide? If not, it's cool. I'll cover it. Oh, these are some testimonials from people who have actually attended the bootcamp or taken the course already. It's a brand new course. Guys, again, this is a full walkthrough. Look at these reviews. They're literally super long. If you have the time, read through them. I mean, these are real people just like you and I who, same thing, educated and invested in their education. And they're starting off 2022 super strong and really committed. And to take them to my next point, you can stay on this slide. I'll talk about the boot camp. So again, if you can't make it to the boot camp and you don't want to have that recording of the boot camp for whatever reason, I don't know why that would be an issue. But if you don't, you can start with the course, educate on your own, and you'll have the course for yourself. And again, this is super in-depth. Once you sign up for the course, you'll have all that recordings and the session that you can log in and study on your own time. Or if you want to attend the live crypto bootcamp, that's also another option for you guys, right? I have attended bootcamp with Richard. Quincy has as well, and literally, it's him teaching you for 2 days. You can raise your hand and ask a question. He's an instructor. He's a master instructor for this camp, and he literally takes time to answer your questions, like if you were in a classroom setting. I know many of us learn in different ways, and that's the reason why we have different options, right? So when you message one of us or message Richard himself, we ask you a few questions, right, to figure out which is the best route for your education. For example, myself, I'm more of a hands-on learner, right? So I have to be live and I have to be asking questions and, hey, that wasn't clear. Can you please cover that for me again? So as myself, right? Again, I have peers that love learning on their own. They love to just sit down, grab a cup of coffee, close themselves in a room and just study, right? They like to study, review the video, go back, take more notes. I like that as well, but I learn them more efficiently if I'm live asking questions and I'm seeing somebody kind of educate me, right? Maybe it's because of all the schooling we've done, right? That if you have a teacher teaching us. If that's you, definitely sign up for the next bootcamp. Again, send Quincy or myself a message and we'll be glad to walk you through and activate you a discount as well for that bootcamp. That again, we will have to manually activate for you guys for that bootcamp. But shoot us a message and we'll be glad to help you out with that. Quincy, can we go to the next slide?
Yes.
Thanks, Quincy. Cool. Just a quick little timelines. So on the 15th, we have the Wolf Street avatar that will be coming out. So for those people who are holders of an NFT for the Wolf Street, now if you're looking to actually join the metaverse with us, again, a lot of big things coming on the metaverse. If you're looking to have your personal avatar, that will be launched on the 15th. So it's a full avatar for you to use in the metaverse. So guys, keep a lookout for that date because if you're interested in that, you will be able to, whitelist on your avatar. And on the 31st, the Day Trade Academy is opening. Again, stay tuned, stay active in the group. We're doing live calls every day inside the group. You're getting signals every day. We're doing a free session with the instructors every Wednesday at 8 p.m. It will stay the same Wednesday at 8 p.m. So make sure you guys are, staying up to date and following along if you're really interested in learning, right? Can we go to the next slide, Quincy? Cool. So again, get in touch, right? So thank you so much for all of you guys being on here. One thing I do want to tell all of you is that the company, if you guys were on the call today, we're expanding, we're growing. This is something brand new that no one's really doing. This is going over into a fully digital, our own platform, our own app. It's an actual business, right? We have a huge team and we're expanding more on that. If you're interested as well and, being part of this growing business, shoot me a message and I will send you a link for you guys to fill out an application. We're going through applications right now. I already interviewed a few people. We're super excited to be growing and to be expanding. And again, this is just the beginning of Day Trade Today. If you guys have been with us for over a year or two, you guys would have seen how much growth we have had. The group is already at 12,400 members. That is incredible, right? Just a few months, a month ago, maybe 2 months ago, we were at 4,000, 5,000 members. Like it's incredible to see how much growth this community is having, that we're now moving over into our own app. Like, think about that. And it's not just a regular app. It's a Web3 integration. This is a Web3 platform that we're super excited to be part of, right? Imagine this, as Quincy was saying, everything's on the blockchain, right? A lot of people right now are still not comprehending how important it is to educate right now in the crypto space. Stocks alone is super important, right? But the crypto space right now, I like to say, and me being a financial advisor previous to joining, everything I'm seeing, such as staking, yield farming, all of that already kind of exists already in the, the stock world, in the regular finance world. We're putting people's money into mutual funds, into ETFs, and specific stocks, right? We're trading it a little bit for them. But imagine the crypto market is finance level 10, right? You're getting 12% APY on certain stakes, right? That is incredible. I don't think people comprehend how big that is. The majority of your ETFs and stuff are right now, depending on the market, right? But you're getting 6%, 7%, 8% on certain things. You're getting 12. Your savings account alone is giving you 0.02%. And guys, I said 0.02. I didn't say 2%. And that's something people don't really comprehend. Inflation is at 6-7% already in the United States, at least. Imagine you're losing money by 6% just saving it, right? Like, does that make sense? You're losing money by saving your money, while the crypto world is taking off right in front of our eyes, and many of us are still wondering, what coin should we be buying, or should I hold my Dogecoin, right? Like, think about this. Educate. It's crucial to educate, guys. The crypto market is taking off, and it's not stopping anytime soon. If you have done any research on the crypto market, it just keeps growing and keeps growing. A lot of people are right now with the pullback are like, oh, the crypto market is pulling back. It's on sale. We're stack up on that, educate on why you're investing into these tokens is super crucial, guys. I don't think many people still comprehend on how important it is to educate. Imagine this, and I tell people all this all the time. It's like investing into the stock market when it first started, and getting access into investing into Coca-Cola, into these big companies that blew up years later, right? And all these people like Warren Buffett did, right? They were there, they invested when they were young, they educated on what the stock market was, and look at the net worth, right? This is what the crypto market is. It's a brand new market. It's crucial to understand how it works, how the blockchain works. It's not just about what coins I'm getting, it is how do I monetize on every aspect of this market. So guys, again, if you're interested in that full in-depth course Richard just launched, literally it's brand new, send Quincy or myself a message. We'll get that to you guys. And that discount's already is already active. The one for the crypto bootcamp coming up, that one's really cool. That one, the seats are all taken for the session already. But if you're looking to learn it like live for 2 days, send one of us a message. We'll open up that spot for you, and we'll activate that code, the discount code, for that crypto session, first one of the year. So make sure you guys are starting this year strong. I know many people are still on the sidelines wondering, doing their New Year's resolutions or whatever. If your resolution this year is to level up, then you got to go all in. You got to go all in. You have to educate, and you have to really move forward. Like, I don't think many people understand this, right? Like, if you're watching right now, it's because you're taking an hour or so, longer than an hour already, to be part of this and educating. Many people miss this amazing opportunity that Quincy just put in front of them. It's a free lesson on the blockchain. Like, you know how much money people are charging for this session alone that Quincy just gave you guys? If you go on YouTube, you can research on your own, but it's going to be a mess, right? So start educating, start getting serious about your education and your investing. This year, 2022, should be one of the biggest ones yet. And we're all here. We have a whole team here to help you. The new platform is launching. The sky's the limit. If you guys want to ride it with us to the top, we're here to help. And Quincy, if you want to close it up, bro, have a good night, everybody. Thank you so much for joining tonight.
Yeah, for sure. Yeah. I think the main point is really that as a company, especially it's funny, right? Because I remember when I joined DayTradeToday in the summer, I think it was 2019 in the summer, and that we had a couple live sessions a week, and that I was with my parents in the backyard, and Richard was going live on Instagram, and I was or in Telegram, and I was following and going around. And 2 years later, we have the app launching, we have the ICO probably coming, coins, we are moving to the crypto world. And the company is running, guys. The company is running, we are running, and even we and even I are learning everything different. For example, just last week, and I shared this in my market update on last Tuesday, just last week, I came across a use case for Terra Luna, for example. So that I found out that if you get a Luna wallet or a Terra wallet and you get your Luna coins and you swap them into UST, you can stake them for 19% as a stable coin, 19%. And that's what I found out last week. So things are getting insane, and step by step, we as a company are running and we are discovering multiple things at the same time. And what we want to take you guys with us. That's what we're doing. That's what we're doing with the courses and with the sessions. And that's why we're updating everything every week. And every week we have a new session, because it's not because we want to push out the same information. No, it's because we're every time we're looking and finding and walking into new things. And that's what we want to share with you. So we are the front runners and we want to take you guys with us. And the only thing you have to do is to hop on, follow and hop on. And that's what we're doing with these boot camps and with these sessions. So make sure you hop on, guys. So I lost Q&A very quickly. Tatjana is asking what happens if the condition of the phone says no scratches. What keeps the person who get the phone from lying that there are scratches so they don't have to pay for it? So basically saying is a contract, a smart contract is an agreement between two parties. So both of the parties need to agree. So Jamie needs to agree that he delivered, and I need to agree that I have received what I expected. So if one of the parties don't agree, the deal is off, right? Because the agreement is not being closed. So both parties needs to agree on the outcome of the contract. That's called the consensus. So if the one person is lying, the other person is not going to agree, so the deal is off. And that's how smart contracts work. That's how blockchains work. So understand it's a lot of information. This is really actually quite entry-level blockchain. So take it in consideration that this is the basics and that you can go very deep on every aspect that we've been touching very slightly today. If you have any questions, like Jamie's saying, on blockchains, on trading, on boot camps or whatever, we're in the Telegram. Reach out to us. We're happy to help. The contact information is in Telegram, and make sure that if you're reaching out to us, make sure it is us, right? We have an official title. I'm an instructor. Jamie's manager, I think, in the group. So make sure it's really us. So thanks all. Had a really nice time. Hope you learned from it. And don't forget to hop on, guys. We are the front runners. You can hop on with us. Have a nice evening, and I will see you in the group.